Sometimes what's bad news for the economy is good news for the stock market. Now, this might not make sense, but right now, something is happening in the economy that is going to end up being bad in the long term. But at least in the short term, it's going to cause stocks to continue to go up and continue to rally. But in order to understand just how long stocks can continue to rally and how much they can go up, we really have to understand what's happening with these economic news right now. And the fact is, the stimulus that caused the stock market to rally in late 2020 and early 2021, it's back. The government is back to spending trillions of dollars in stimulus, but not the way that you think. As they say, history doesn't repeat itself, but it does rhyme. See, back in 2020, after the major COVID pandemic, the US government printed trillions of dollars in fresh stimulus. And this had the effect of boosting the economy and boosting the stock market throughout the second half of 2020 and pretty much all of 2021. But eventually, that came back to bite us in the butt because inflation went sky high. Fact is, you can't double the monetary supply in 2 years without doubling the inflation. That's just the way it works. And as a result, we've been dealing with very high inflation throughout the end of 2021, all of 2022, and well into 2023. And as a result of this, the Federal Reserve has responded by raising interest rates. Now, at least through most of 2022, that caused the stock market to fall. But then in October of 2022, the stock market bottomed out and it started to rally. Now, while a lot of this rally can be blamed on the AI hype, as well as just market psychology being extremely bullish, even if a little bit irrational, a lot of the rally is also put to blame on the fact that investors expected the Federal Reserve to pause and stop raising interest rates. Yet, for the past 8 months, the Federal Reserve continued to raise interest rates. They didn't do their first pause until June. So why would the stock market continue to go up from October of 2022 through now if the Federal Reserve continued to raise interest rates? Well, it all has to do with the fact that there's been more spending. And the fact is, the stimulus is overweighing the Federal Reserve's raising of interest rates. And this has been really good for stocks. Problem, though, is it's going to cause inflation to come back and go back up again. And I'm going to show you all the data, what's going on with all this. But first, you got to understand where all the stimulus is coming from and why it's affecting the US stock market. Over the weekend, Chinese President Xi and US Secretary Blinken met in a high-stakes meeting. The goal of this meeting was to improve US-China relations. But it wasn't just US diplomats meeting with Chinese officials. The high-level diplomatic engagements between Washington and Beijing have come as several business leaders have also embarked on visits to China in recent months, including Tesla and SpaceX CEO Elon Musk, JP Morgan CEO Jamie Dimon, and Apple CEO Tim Cook. China's Xi even held talks with Microsoft co-founder Bill Gates last week. So why would the leaders of all of these companies go to China to visit with Chinese officials and even President Xi? And the reason is that it's very important for these companies to have good US-China relations because they do a lot of business in China. Both Apple, Tesla, Microsoft, all of them have huge amounts of Chinese sales. And if the Chinese economy can improve, and if these companies can increase their sales in China, that is going to result in increased profits for these companies here in the United States. So it's very important for these relations to get better. And if China's economy can improve, then we can see the profits of US companies go up as well. Fact is, we are in a global economy. And if China's economy can recover and increase and get better, then profits of US companies can increase and get better. And this is exactly what we've been seeing. And while the US government has not done that much spending here in 2023, China's government has spent trillions of dollars in new stimulus in order to boost their economy coming out of their COVID lockdowns. And this has had the effect of boosting sales in China of these US companies, which in turn has had the effect of increasing profits. And while the news headlines on Monday said that global stocks had slipped as Chinese stimulus hopes had faded, the fact is the quote-unquote slip is negligible when you consider just how much the stock market has risen this year. The fact is, stocks have been rallying over the fact that China has been pumping trillions of dollars into the economy, which in turn pumps billions of dollars into the global economy. The truth is, the market's just taking a breather. It's a one down day after a blistering few weeks. And even here in the US, the massive stock market rally can be seen in market psychology as we look at the CNN Fear and Greed Index, which is in extreme greed. Now, while all of this stimulus has caused stocks to rally, it hasn't caused the Chinese GDP to rise as much as some people had hoped. And this, in fact, has caused some analysts to downgrade just how much they think the Chinese economy is going to grow by this year. Goldman Sachs now joins Wall Street banks in cutting China's growth outlook as the post-COVID bounce fades. But even though many banks are cutting their forecasts of how much China's economy is going to grow, the fact is all of their forecasts still have a GDP growth of more than 5%, which is very impressive and will certainly be a tremendous boost not only to China's economy, but also to US stocks, especially those that do business in China. And there's also a belief that because China's economy isn't growing as fast as they would hope, that China is going to increase their stimulus and put even more money into the economy, which should further help boost US stocks. And this is why we are seeing stocks rise. Of course, it's not the only reason, and I'll get to other reasons here in a second, but it's important to understand that over the past few weeks, we have seen not just tech stocks rise, but we have seen market breadth fix itself, and we are seeing the entire stock market go up. And a lot of this has to do with all this trillions of dollars that China is pumping into the global economy. Now, the fact is that while all of this stimulus is very, very good for stocks in the short term and helps boost the economy in the short term, anybody who has invested since the 2020 global pandemic knows that all of this stimulus has a dark and dirty downside. And that is the fact that it causes massive inflation. And it's one of the reasons why inflation remains sticky. And to help understand what that might cause the stock market to do in the future, let's take a look at just what's happening with all of this. Of course, it's not just the stimulus that's causing the stock market to rise, it's also AI hype. The problem is investors can't agree on whether their recent run looks like a prelude to an eventual bust like that of the dot-com era or the start of a more durable rally. But this week, money managers as well as other investors will get a chance to hear from Federal Reserve Chair Jerome Powell, who is scheduled to testify before Congress on Wednesday and Thursday. And so far, because of all of the stimulus that China has pumped into the global economy, the economy here in the US has proved more robust than many expected, and inflation has stayed hot. The combination of those two factors has pushed the Federal Reserve to signal that it might raise interest rates at least 2 more times before the end of 2023. The fact is, as China continues to pump money into the global economy, inflation won't go down. If anything, inflation will go back up. And this means the Federal Reserve now has to fight all of this printing of money. And the only major tool they have to fight that is by raising interest rates. And that's why the Federal Reserve is coming out saying that they're going to have to raise interest rates at least 2 more times this year in order to fight all of the spending that the government are doing. But stock market investors doubt that the Fed will keep raising interest rates. The market's basically saying, hey, Fed, we don't believe you. But one threat to that line of thinking is that investors wind up being wrong about second-guessing the Fed. And the old saying, don't fight the Fed, inflation might not subside quickly enough for the central bank's liking, and that might force the central bank to follow through with further interest rate increases, potentially putting the brakes on the stock market rally. So who's right? Is the Federal Reserve right in saying that inflation is sticky and we need to raise interest rates more in order to get it down? Or are stock market investors right in saying that inflation is going to come down on its own and the Federal Reserve won't have to do any more interest rate increases? Well, to answer that, we really have to look at inflation and why it just won't go away. The fact is, core inflation has been sticky. Even though it stopped rising, it has yet to fall. All it's done this year is flatten out. And the problem is that the impact of the past year's aggressive interest rate increases seems to be ebbing, with signs that the housing market is stabilizing and unemployment is resuming its decline. And that puts central banks in a tricky spot. They need to decide if inflation is stalled way above their 2% target, which would require much higher interest rates in order to fix, or if inflation decline is just delayed. If central banks get the call wrong, they could push the rich world into a deep recession or force it to endure years of high inflation. The problem for the central bank is that economies are still recovering from the pandemic, and the delayed reopening of China's economy has supported growth around the world and might even get a boost with fresh stimulus measures. So if global investors are correct, China is going to continue to boost their economy with fresh stimulus. This in turn is going to cause the global economy to continue to get a major boost of fresh money being pushed into the global economy. That in turn is going to cause inflation to stick around for a lot longer than many had hoped. And that in turn is going to cause central banks to have to continue to raise interest rates. But the stock market doesn't believe any of that is true. The stock market is basically saying the Federal Reserve is lying and that global investors are lying and that China is lying. And they're just fighting really the entire world, expecting the inflation to just magically come down on its own. Now, no doubt that the stimulus that China is pumping into the global economy right now is having a big boost for stocks around the world. But we all know that eventually that massive amount of stimulus causes high inflation, which eventually hurts the economy. So at least in the short term, while China continues to do stimulus and continues to pump up the global economy, stocks should continue to go up. But once the Chinese stimulus ends, whenever they decide to end it, that could be the top of the stock market, and we could be facing a significant round of interest rate increases, much higher than anybody expects, even the Federal Reserve. And in turn, we could be seeing a comeback of inflation, where inflation starts going back up again. This is exactly what we saw in the 1970s during that period of high inflation, where inflation went down for a couple of years, but then it came back and started going back up again. In fact, we didn't get out of it for 11 years. This is going to be a problem that's going to be around for a long time. This is not going to get resolved this year, and it's probably not going to get resolved next year. So enjoy the rally while it lasts, but keep your eyes on the Chinese government, because when that stimulus ends, the stock market rally will most likely end as well. Now, if you want to be kept up to date on everything that's happening this week and everything you need to know about, especially when all the Fed speakers are speaking and the other economic news that's going to move the stock market this week, make sure you sign up for my free newsletter where I give you all of the information that you need to know before the market opens for the week. Make sure you go sign up for that free newsletter so that you will know everything that's going on in the stock market and everything that's going to move the stock market for the upcoming week. All you have to do is go to stockcurry.vip/newsletter to sign up for that free newsletter. That's stockcurry.vip/newsletter. If you got a lot out of this video, then be a good friend and share this video with your friends and family and on your social media pages so that others will know what's going on with the stock market as well. Don't forget to hit the like button and subscribe. And if you missed the last video I uploaded, make sure you watch it here.